You're welcome back. You're still watching Business Morning on Channels Television. The emergence of digital lenders has widened access to credit, especially for the underbanked, financially excluded individuals, startups, and micro, small, and medium enterprises within the Nigerian consumer financial space. Notwithstanding its benefits, digital lending has been observed to currently face increasing incidents of customer defaults, and of course, customers have also been complaining of strategies that the lenders are using. Well, to help us understand and delve into this, we have Muyiwa Ayojimi, the Chief Executive Officer of Consumer Metrics. He's active in that space, and he joins us. Good morning, Muyiwa.
Good morning, Nini.
Good to have you. Good to have you in the studio.
Great, thank you.
Okay, so please help us understand first, so we know that we're on the same page. Who are the digital lenders?
Okay, so today we have digitalization being a form of innovation for lenders. So for any fintech company, for any financial institution that uses technology to lend will be considered as being in that space.
Okay, so that will mean I get some messages where people say, "Oh, you are approved for 100,000 naira loan." You know, all those kind of suggestions. That will mean people in that class.
That will mean people in that class.
Then I also get some messages where they say, "This person is a fraud. This person is." So that will also mean those messages come from such people.
It does, and primarily today, we have witnessed quite a number of lenders, but within the traditional space. You see the traditional banks as well.
That's bad debts.
That's bad debts. They are also leveraging on technology today to be able to say, let us improve our loan books, and let us also be able to widen our tax net, our income net. At Consumetrics, we keep preaching something, and that is responsible lending and borrowing, right? Within that space, today, there is an increase in number of persons that borrow funds within the digital space. Now, today, we had an informal research that we had, and primarily, we came up with the fact that for every employee within the Nigerian space, he would have borrowed between 20 to 25,000 naira, perhaps 6 times in a year. Okay? That would give you roughly an average, okay, of about maybe 4 trillion or more within that space. So there is a market. There is a credit market that is waiting, to be explored. But again, we're saying, even in exploring this credit market, there has to be a focus on having financially responsible lenders and borrowers. So if you look at that space today, you find out that the ratio of credit borrowing today in Nigeria, if you take the statistics as at December 2021, it's about 16%. We can't compare with other climes in the world. UK, you have about 160-something% and thereabout. But we're saying that within the lending and borrowing space, can these relationships be regulated? Because as it were now, we're only
Who should regulate it?
The CBN, the FCCPC, who should be on the side of consumers. I see lately that they've been doing quite a lot in that space, but much more needs to be done, okay? And very importantly, we're working on having an advisory, an advisory that would guide this platform. Because in the growing economy, the businesses would always survive when they have access to loans, when they have access to credits.
Okay, so before you go on, I've always wondered, because you see it everywhere now, oh, you can get this amount of money in 24 hours. No, less than 24 hours. Yeah. You don't need collateral. You talk about responsible lending, because sometimes the lenders come across as if they are too desperate, and so they let go of what they're supposed to look to. So you promise someone that you're going to give the person loan in a couple of minutes or hours, no collateral, nothing. What are the plans to get the money back?
Yeah, you're quite correct. You get that even in minutes these days, particularly from the loan sharks. And the means of recovery that they have, decided to use, which is part of what we're preaching against, is very unconventional means. So they have back-end access to customers' profiles, videos, details, and what have you, and then name shame such persons whenever the loan goes bad, right? So in the midst of all of this, the borrower will typically be responsible. However, ab initio, at the point of loan engagements, at the point of the credit transactions, you find out that there are always hidden terms and conditions that are either never clear or terms and conditions that were never there. So it's back to the lenders. It's also a responsibility for the borrowers.
So are you saying it's because of those hidden conditions, or maybe the infused new condition? Is that why it seems that there's a lot of defaults?
Not at all. So there is a growing trend for credit that is matched with the appetite that the lender is latching in on. Now, having seen that, he says to you, you can get this quickly, and then you can pay over this period of time, but it's going to come with very high interest rates, which might seem insignificant at first, but much later on, you find out that it becomes quite astronomical if you aggregate it over a one-year period. So the whole essence of having to still look and deep dive in that space is for some framework around financial consumer governance to guide both parties. You wouldn't take advantage of someone who didn't see your terms and conditions in full. I can say to you clearly, there are some platforms that once that message you're saying comes through to your phone, there's a limit beyond you can go. So you fill the forms, you want to look at the terms and conditions, some you see, some you can't see. And then because you have clicked agree, that's binding on you. Whatever it is, subsequently down the line, you don't get to know.
So are you saying that the rights of consumers are being infringed upon?
Absolutely. The rights of a consumer, as enshrined adequate rights to information, transparently. There must be a trust relationship. You take the typical day-to-day transaction. A friend will borrow a friend money. Why? Because he's trustworthy. Okay, so those elements must be there. So for the consumer needs to trust that process. The consumer also needs to ensure that he can rely on the information that is being given, and that indeed, at the table where the dotted line was signed, for that credit to be obtained, all was well.
So from your perspective now, it's up to the CBN and the FCCPC. We do know that the FCCPC has been working. We've had them a couple of times on this program and other programs on Channels Television. And because of the need for these funds, we cannot tell people, okay, take your time before you agree. Why don't you read through? That's also another aspect.
Yeah, and you can underemphasize the fact that that growing need, which even the traditional banks have seen lately, to also capture both the underbanked and the unbanked will be there. And in regulating that digital space, it's like dealing with someone in the air, right? But you can only see the footprints on the sands of time. Again, it is just very important that some guidelines is issued around this. For the traditional banks, it's very clear. For the financial institutions, their own codes of governance, is quite clear. But in this digital space, there's still a lot to be done.
Yeah, it's a new space. So other than what they do, sending messages, embarrassing, the borrowers and all of that, what else do they do? I shouldn't be asking you that. You're not a lawyer. I don't know you to be a lawyer.
I'm not a lawyer. I'm actually a lawyer.
to know if the consumers can actually sue them for, the damage of their image that they have done.
Okay, so maybe I say this. I'm a lawyer, actually.
Oh, great.
Legally, you shouldn't be able to lend anyone money if you're not licensed to do that. So guess what? The loan shark would avoid every opportunity not to get into any legal tussle with you. And conversely, as a borrower, you need something to tie this person to, right? So that you can't build something on nothing and expect it to stand. So in the event that you bring yourself or you submit yourself to some legal space, it might not stand, except perhaps you bring in mediation and then to say, yes, I conventionally borrowed you money, I lend you money, in that space. Otherwise, it will remain persuasive, it will remain aggressively, all forms of aggression, to get the borrower to repay. I was having a long laugh at some chat between a borrower and a lender recently. And the guy had to say, look, Amadio, I'll fire you there. So because he's losing hope that he won't be able to get it back because there was a lot of blackmail.
So these lenders don't have a sure way of getting the money back?
They actually don't.
Because for some individuals who really don't care who you tell or how much you spread the message, that's what you would do.
Absolutely. So Consumetrics is issuing an advisory soon, and is going to be able to stratify the responsible lenders and what we'll call the irresponsible lenders. Because some of these borrowers know they go sign up to new phones, new platforms, leave minimal things within that platform, and then borrow. They themselves, there's a network, there's a community of such borrowers, who are highly responsible. Those are not the target. But it's quite important to also, as we issue advisory, we do to both the lenders and the borrowers.
Yeah, I do know that. I had a conversation on Business Morning some time ago about credit rating. That's what like places like the US, they check your credit rating to be able to get a loan. I hope we do get, I know there's a company that was working on that, but I think it hasn't blown yet.
Yeah.
They haven't been able to capture a lot of people yet. Else, before, if you want to do a mortgage, if you want to buy a car, hire purchase and all of that, you're supposed to be able to access the rating of an individual to know if the person is creditworthy or not.
Absolutely, Ini, and that's part of enshrining that framework for responsibility. We already have within the system credit bureaus. We have credit bureaus in the country that both the traditional banks have been working with. So you can't take a loan from bank A to B to C. Your credit profile will be there. And it will be visible for the next line of credits that you may want to go and take. But for us, we're going to be issuing governance ratings around the consumer space. Okay,
well, a lot of data obviously is needed. And once again, the need for data, we cannot emphasize it. Well, thank you so much, Mr. Muyiwa Ayojimi, the Chief Executive Officer of Consumetrics, for your perspective this morning. We would love to have Nigerians who are responsible lenders and responsible borrowers.